Hello and welcome to Building Tomorrow's Insurer, the podcast where we dive into people, platforms and the ideas reshaping insurance from the ground up. I'm your host, Nigel Fellowes-Freeman, the founder and CEO of Canopy, and today I could not be more excited to be joined by John Warburton. He's the co-founder and CEO of Konsileo. Hopefully I pronounced that right, John, and we'll go a lot into that today. And it's when I've been diving around doing a bit of research, John, it seems that you're kind of very focused on commercial insurance. It's a broking platform, and we'll dive deep into all of the ins and outs of it today. Just to touch on some of John's past, he's had a career spanning Aviva, Allianz, as well as now he's a co-chair in InsurTech UK. And so we'll make sure that we learn a little bit about what's going on in the UK market. So, John, thank you so much for your time today. I really, really appreciate the time.
Yeah, well, it's lovely to be here. Thank you. And finding the time zone that would work for both of us. You're in Melbourne and I'm in London, so yeah.
Yeah, the overlap is small, but we've made it work. So we got there. John, I would love to start. I quite like starting at the beginning. And obviously you've had a career within the industry, and some people say they fell in, others say it was given to them by birth or family. I'd love to know your story in terms of into the industry as a really nice kickoff point.
So I was my dream was to join the Navy, and my dad was a naval officer. And he was also an insurance broker after he retired. And so I was sponsored by them through university in the 90s. I'm really old now. This was in the early 90s. And I went to a place, I studied Middle Eastern politics with a bit of Arabic. And the idea was I was going to be the next James Bond. I was going to go like pottering around Iraq, swapping Quranic quotes with Saddam Hussein, etc. But then the Cold War ended and there were massive defense cuts, and it just didn't look as much fun as it did when I signed up 5 years before. So I bugged out of that, and of course I'd left it late to get a job, in the graduate milk round, and the only ones left were insurance companies. They were the only people still recruiting, so I ended up in insurance.
Still desperate for graduates.
About it because my dad had ended up as a broker, but yeah, that's the reason, and that's the truthful reason, sadly. And I think most people, unfortunately, have that experience. And then then I started. I worked in this 250 person office in Leicester. It was back in the day where it had fully integrated branch offices of these big insurance companies. Personal lines on one floor, commercial lines on another, underwriting claims, they're all in the same building. And the guy who ran it, Mr. Griffiths, had his Financial Times ironed by his secretary, and it was called not PA in the morning. It was all very, very much the sort of 90s legacy, 70s, 80s way of working. And of course, the industry was changing slowly. But I got this bug, and the bug I got was I got this sense of what a marketplace is like. And even in the Leicester insurance market in the early mid 90s, there were brokers and there were underwriters, and they'd go to Willie Thorne's snooker hall and have a few beers on a Friday and whatever. But there was this marketplace. There were risks out there. There were clients who needed cover. The brokers would sort of do their thing. And what I came to understand, and being because if you know the UK, which you obviously do, Nigel, Leicester's kind of in the Midlands. I was from the south, so I had the wrong accent for being there. I wasn't authentically from there. And you just get this sense of this ecosystem and this artisanal pride that people had in their craft. They're crafting commercial insurance quotations, insights, risk insights from brokers. And I got the bug. I was beguiled by it, actually, and much more than I thought I would. You tend to think of insurance when you're an outsider as being an industry that's, pointy head people kind of filling in spreadsheets. And actually what it is people talking about, cloth manufacturers in the Midlands and shoe manufacturers in Northampton and stuff like that, and how the risk that they own, what are they likely to burn down. And it's like, this is real lives. These are people who run the businesses that everybody works in around these towns, and they need risk advice because that's what keeps their businesses going. And if the worst happens, they need, and I thought, okay, there's actually a bit of a moral purpose to this, and it's actually pretty cool. And then I went on later to, after a few years, because I'd done this crazy degree. Good old 90s. Oh, he knows a bit about the East, so they sent me to Hong Kong and Beijing. I was over there for 3 years and did all sorts of other things. But that stayed with me. That first 2 or 3 years as a graduate trainee in this 200-300 person office, which I rotated through all the functions, stayed with me as this insight into the subculture that is the commercial insurance broking industry. And that's what I returned back to later when I founded Konsileo. It was getting back to those roots, those artisanal roots of that experience of being part of that marketplace. And I think that's, for me, and I think it's true in Australia as much as it's true in the UK and around the world. It's true. I spent time shadowing an insurance broker in California once for about 4 weeks as part of an MBA project, and it's the same there. Connection, people connections, and solving people's problems, whether they're table grape growers in the Central Valley of California, or they're shoe manufacturers in Northampton, or they're farmers in New South Wales. It's the same gig. You've got people out there who care about their clients and want to do the right thing, and then the industry they connect into somehow. And I think that people factor is so key to our industry, even though you're running a tech company, we're big, we're a technology first business. The technology for me in the market that I know is about wrapping around people. That's that's my driving force.
Isn't it interesting that lots that we read and hear and see probably, which is like some difficulty to attract people into the industry. When you hear stories like that of the impact that it had on you when you came in, that's almost a challenge, isn't it? It's the challenge of how do we, as an industry, project that on the outside to kind of speak to people around how great the industry is, how impactful it can be on people's lives. And you and I now know from a technology standpoint how hard the industry is pushing from a technology standpoint. So it's got all of these ingredients to really be fulfilling and kind of mission driven, kind of purposeful lives. But we haven't done a great job historically of projecting that, and therefore getting great people in.
Yeah, we're not good at it as an industry. I'm on a committee with BIBA, the Insurance Broking Association in the UK, and it's a constant challenge to articulate. But I think the social mobility story, I mean, I'm not the greatest example, middle class kid, dad was in the Navy and all that stuff, and I was a graduate trainee, so slightly the exception, but especially insurance broking, actually, even more than underwriting, but insurance generally, but definitely broking. Most of the people you meet in broking started filing clerk, answering the phone, something pretty low entry level in terms of the qualifications required, and they gained massive professional pride and massive expertise in a kind of some sort of apprenticeship model, where even if it was informal, where they build up tacit knowledge. They build up tacit knowledge in it's broking about risk factors and what the markets are and policy terms and conditions. If they're underwriting, it's the same thing, but looking at it from the pricing and underwriting point of view. And there's a deep level of expertise, a craft-like level of expertise that people build up. And this is the secret, the hidden secret. These are people who can earn six-figure salaries and can become very successful and deserve to as well, without some of the entry barriers that there are in other professions. I mean, it's very hard to become an accountant without a degree. There are people, it's very hard to become a lawyer, but actually the impact of this profession is as significant as that. And the other thing I have a real passion for is that I always make this little speech when we do our inductions, when new people come in, is, if people say, oh, where do you work? Oh, in insurance. It's a bit, you go to a dinner party or whatever, you meet some mates, oh, what do you do? I work in insurance. Oh, I'm sorry, yeah, but it's insurance, it's shit. Yeah. And, oh, I'm sorry, I'm in insurance, it's boring. It's like, no, we are the oil, the lubricant of the Australian or the British or the American economy. The world does not work without the insurance, because people do not make investments to start businesses and keep going in businesses if the worst happens and they're not covered. They need that. They need it to be. It's absolutely the key ingredient in a functioning market economy. You can't do it without it. So everything that goes on in your community, in your country, it will not happen without adequate insurance. And if you get the insurance right, you actually are boosting investment, you're creating jobs. Wow, you're that hero. So next time that your kid is asking you to go to school and you say, oh yeah, I work in insurance, I want to come and talk. And it's not the guy who's a fireman.
That's the goal. That's the goal.
It's not going to happen, but that should be the goal. Yeah,
that should be the goal. That's what we should put on the board. John, I want to take you now. You've founded. You've gone through these kind of early phases. You've gone out east, and then you kind of work your way through some corporates. You kind of spend some time at Aviva. You spend some time at Allianz, and I'm sure I'm going through a bunch of different parts of those businesses. Mm-hmm. Can you kind of talk to me around kind of how those experiences became the foundation of founding your business? How did those experiences build that knowledge base and that inquiry to then go, you know what, I need to do this myself?
10 or 11 years after I started in the industry, I'd been off to Asia and come back and done some other stuff. And I've been in consulting for a bit as well. But anyway, in 2004, I found myself in Allianz. I was head of sales and distribution for their commercial business in the UK. It's about $1.5 billion premium business. And there was a challenge emerging, and the challenge was that we had a relatively stable distribution base, and hundreds of brokers that would trade with us. It was that ecosystem I was talking about before, and but there was a big disruption. The disruption was that external capital was coming in, and brokers were consolidating, and they would come to us and they would say, "Hey, these policies that you pay us, 17.5% on, we'd really like 25%. Actually, we'd really like 30. In fact, with some work transfer, could we have 35, please?" We're like, shit, we're falling off our chair. This is a massive shock to the structure of our industry. Obviously, our cost base was calibrated around paying those sorts of commission rates. The cost that an insurer was actually bearing was about, I think at the time it was 11 or 12% was what we were spending on our own infrastructure, 17.5 going to the broker, 11 or 12 going to the insurer. If you add the two together, you still don't get to, 30 plus points.
30 plus, yeah.
And that's taking all of our infrastructure out of the equation. And so this was a real challenge. And me and my colleagues, we looked at it and we saw that effectively we the insurers were being asked to pay for effectively a roll-up strategy. I think the same thing happened. I remember at business school studying it. I think the same thing happened in the funeral parlor industry in the US in the 1980s or something. I mean, there's a classic game, right? Mm-hmm. You roll up. It's a PE-led phenomenon, and obviously it's that was the early stages, but we're now in like version 2 or 3 of it, and it's still carrying on. It's basically M&A led. Brokers buying up other brokers, and you buy it at X 9 or 10 times EBITDA, and you flip it for 12 or 13, and then someone else flips it to someone bigger at 16, as sort of the sharks eating each other on the way up. And then but that process for me missed one key thing. So from a financial engineering point of view, interesting. It missed the proposition to the people who actually create value in the broking firms. And the people who create value in the broking firms are not the people who do the placement deals with insurers. They're not even the people who do the technology and processes. They're certainly not the regional managers who dish out sales targets. The people who add value in insurance broking firms are the client-facing brokers who are out seeing, or the market-facing people who could talk to underwriters, i.e. client handling and underwriter, individual case brokers, or people who go and see the clients, or both. So it's client-facing staff where the value in broking derives, and those folk were effectively being taken for granted in this process, and there were a bunch of impacts on them. So there were, so this is back in the mid-noughties now. So the things that were happening, they were there was something about their career model. Now you could argue, oh, I was in a regional firm of 30 people. I'm now in a firm of 500 people. There's more career opportunity for me if you think the hierarchy. But actually, what you've lost is that opportunity. You know, it would have been that Dave, the guy who ran it, would have retired. There'd been some sort of management buyout, and you know he would have been fairly.
Take it over.
He would have ended up, you know, being a director and running that. But and that aspect went. But maybe there's a bigger organisation to be part of. Okay, but for most people, you know, they're quite local, community oriented. It was like actually that's a loss rather than a gain. But more significantly, you then ended up with almost always, and this is still going on today, almost always when that mergers and acquisition happens, it's just a question of the pace, the markets get restricted. So you were able to trade with, I don't know, the whole market, 100 plus, 200 plus markets. Suddenly you've got restricted to 3 or 4 for each segment, or even 1 or 2 for each segment. So you lose that professionalism in your advice. And that's quite, because if you're an artisanal professional and you go to your client and your promise to your client is I deliver you absolutely independent advice, and I've got the whole market, and you're impugning your professional reputation, which is your foundation of a big part of your identity. So that's quite challenging. And then these firms tend to do some slightly ham-fisted integration because they're not really set up to be, you know, they're sort of Frankenstein's monster organizations where they've bolted on offices and offices and offices. So then they think, oh shit, we've got to rationalize this. Okay, we're going to close an office. Or, oh no, we've got support staff we've got too many of them over here, not enough of them over there. And, oh, you know, Sharon and Michelle and Fred, who you've been working with for all these years, that's in the Dagenham office, and we don't want Dagenham anymore. We want Basildon or whatever. And so you end up losing that. Well, you lose the experience, but maybe you lose that sort of social fabric as well within your business. So that gets diminished. So the servicing isn't as good, and people get stretched. And then finally, then the culture changes because they've made some promises to their PE owners that they were going to drive certain earnings, and you can drive earnings by the two levers to pull. Well, the getting rid of people is kind of the least effective probably. The one the placement one is one, so you must use these markets, and then the other one is, right, I really want to flog you for new business. You must do more new business. You must do more new business. Oh, and you must drive extra income from your existing book by doing this cross-sell or that cross-sell. Squeeze the lemon. It's a kind of, you know, doom loop type of approach, and if you're the artisanal professional, the craft person who loves to service your clients really well, that's really, really upsetting,
challenging
to you.
Yeah.
And what tends to happen is that people don't think of it in terms of they don't feel the acute pain until something really bad happens, like they get a terrible manager who's micromanaging them as opposed to just a mediocre one. But there's this chronic dissatisfaction that tends to grow with that. And anyway, I observed all that in the noughties, and then when I went to I worked in Germany from 2011, and the big imperative I was in Munich working for Allianz, but the imperative there was the future of the tied agent network within continental Europe fundamentally. So if you look across, if you ever go to France, Italy, Spain, Germany, you can see all these little insurer offices, Generali, AXA, Allianz, and it's some guy, you know, called Luigi or Marcel or Gunther or Juan, right, sitting in their office, and they are the insurance advisor from that company, and it's a little bit consumer oriented, but it's also business to business, and those guys, they're a conundrum. They were a conundrum then for Allianz and for all the other companies, because on one side they're hugely expensive. There's these offices spread around all the place. They tend to be self-employed, not employed, but still, you know, it's like that's a big chunk of premium going out on servicing this network. Surely with technology, you could rationalize it, self-serve, da-di-da-di-da. Yeah, it's kind of obvious. On the other side, 11 policies per client, deep intimacy, really know on the consumer side, knowing, you know, when Frau Schmidt has had another baby, but on the business side, really, just like insurance brokers in Australia and the UK, real understanding of their businesses, real care for that, what's in Germany called Mittelstand businesses, these ones where they're, these small and medium-sized manufacturers, real care for them and real insight. And so you have this like deep advisory experience and for the client, and yet this kind of inefficient thing. So this is the story I tell to and so apologies for anyone who's about to have a final interview with me, and I'll have to change my story now, put it on this podcast. But so effectively, what there were was just two schools of thought, and this is the one I always use. Apologies for the cliche, but there's basically the Terminator school of thought and the Robocop school of thought, or I could upgrade my one and say the Iron Man school of thought, right? So the Terminator school of thought was, we get rid of this Gunther. He is not listening. He is not reading the 700-page memo from the head office. We should get rid of this guy. He is just getting in our way. And you and the global team, John, you should come in. You should build the portal. You should do this very nice stuff. Very nice. The clients can deal with that themselves. We don't need this Gunther. Mm-hmm. And then there was another view, which I ended up subscribing to, was actually, technology is this massive enabler. What you need is take Gunther and wrap him in a suit of armor with rockets, machine guns, head-up display. Give Gunther the full tools so he can go out and be that Robocop guy. He's going out and he's spending more time with Frau Schmidt, or actually, Frau Schmidt, the CEO entrepreneur, rather than Frau Schmidt, the consumer. And he's really advising and spending more time. And wouldn't that be great? And I think, just to bring it sort of up to date, I think that so basically Konsileo is the blend of those two insights. So if you focus on the needs of the insurance advisors and you make effectively the employment proposition the business strategy of the firm, and we have this very strong promise: be the happiest, best rewarded, most professional broker you can be with us. And this is actually behind me. You can't see it. These are my proud awards. I've got 4 of these, but they're all for the same category: best insurance employer in the UK for the size of organisation we are. Best insurance employer 4 times out of 5. So that's the employment proposition. And then how do you get there? How do you do that? Well, you wrap technology around the person so that they can do the Robocop thing, so they can spend more time with clients, do what they do. And and I think you bring it up to date, and the AI opportunities with AI, I think they just accelerate the delivery of that world even more than perhaps we were able to, with the pre-Gen AI, because you can do that. It's about giving people time back and augmenting the power of the individual so that you can be that craftsperson. So effectively, if we can, we want to skip over the industrial age, if you like, of broking, which I think is the misery that everyone's had for the last 20 or 30 years, and get back to when I first started, where it was people meeting people and doing things, because the tools get rid of a lot of the complexity. I think that's the dream.
And how are you thinking about that, John? Obviously, every conversation I have at executive level, everyone's both scared and excited at the same time about what's coming down the pipe and what's here today. And how are you thinking about it as a business? Obviously, brokers being and culture being your strategy almost, and people being so important, and these tools, using the Robocop analogy, almost being another incredible tool in the armory. How are you thinking about that?
Yeah, so I had this debate. This fella here, my co-founder Peter, who is looking splendid in an awards event. I had this debate with him the other day, actually, where we were chatting partly about me coming on this podcast and misrepresenting his work fully that I'm about to do. So he gave me a bit of a teaching on exactly what the use cases are that he's working on and what we're thinking about. And I think the debate is, you're right, the debate is where's the solid ground for the individual. And I think of it at the very highest level. I think of it as AI is great at structuring and managing information to reduce complexity. And if you think of what we're in the game of in insurance broking in particular, that's kind of half the job. structuring complex, is digesting information and structuring it according to what the risk drivers are, and then playing that back to the client, and then playing that to the underwriter, and making sure that you've got everybody understanding where you are. And there's definitely a lot of that can be done by AI, but the part that can't be done by AI is ensuring that everybody understands it properly, and that they're in their decision making, they really are. So from a client point of view, you've got this factory, you make widgets, this and this and this could happen. What about this? How much do you care? How much risk are you willing to take on yourself? How are you able to? What's your desire here in situation A, situation B? What are your business? What are your plans, etc., etc. And the process of that discussion and the fact that there's a big powerful thing, which is, I think, a absolute bulwark and a massive value driver for insurance brokers, is that these are long-standing relationships generally. This is not a transaction relationship.
That's exactly what
you've got this memory going year on year. I think that's really key.
That's what I was going to jump in and say, which was you could almost make an argument, which is to say, since the last 10, 15, 20 years, there's been a slow grind of automation to try and automate the things that brokers had to do but didn't want to do, really, in terms of what we've just spoken about. And I think you can make an argument to say, actually, it's almost the perfect gift, which is you can now spend potentially, going back to your marketplace days when you kind of first started in the industry, that you're going back to that moment of the relationship is everything. And that is all that matters, and that is all that you spend your time on. And that they understanding the nuances of the business, that it's very hard, you can do from your data fields, etc. But the emotional component, and you bring that element, and I think maybe that's the thing that I think you can really hold on to and drive on. It may be a little contrarian, when a lot of folks will be saying, well, all of those things are going to be done completely. But actually, I think you could say, actually, this is taking back to humanity, not losing it, and actually going all the way back to the.
That's the dream. That's the dream. And of course, the challenge is you don't want to dilute expertise so that what we're turning insurance brokers into is second-hand car salesmen.
Yeah, good call.
Right. So you've got so then learning is really key. So and learning is really powerful, but there's learning like your Chartered Insurance Institute exams, or your risk assessment and control. So there's a sort of like the hard knowledge, but it's that hard won case study insight that comes year on year, and also learning with the client. So if you've been the broker for a client for 9-10 years, and you've seen them through from their early stages to where they are now, and they've grown with you, then you'll have a memory of those traumas that they went through in the early stages, difficult things, bad hire they made, an accident that somebody had at work, or whatever, and the risk improvements and all that stuff. So I think that knowledge that's built up about the client, the professional knowledge, it's just as critical, even if you can automate. I mean, I think this is the challenge. I've got some kids going through, end of school exams like the A levels, the HSC type equivalent, and yeah, you can definitely outsource big chunks of learning nowadays, but and AI will do a lot for you. But what's the bit that you need to actually know? And I think it's about the learning, and it's about understanding the problems that you're going to be an expert in. And I think that's true. And this is the thing I think everyone in the world is going to struggle with in the coming 5 years or so, is what is my solid ground? What is it that I stand for as an individual? What's unique to me? It's the sort of advice you give any person in their career anyway, is like, what's your unique contribution to humanity? But I think that becomes even more real. But I'm very hopeful, exactly as you said, that this relationship-led approach has got longevity to it, as long as people are not too complacent and don't take away their own professional skill building and professional knowledge. It's just that how you actually do that might become a bit different, and I think that's going to be the challenge for them.
Yeah, this kind of democratizing of intelligence makes it harder and harder.
Yes.
John, we have a lot of global folks listening to the pod, and obviously you are very deep within InsurTechs broadly, obviously being kind of co-chair of InsurTech UK, as well as being in the industry for such a long time. It would be great to get a little snapshot in terms of like how have the last 12 months been within the 12, 24 months been in the insurance industry in the UK, kind of what does forward looking look like? I'd love to get a bit of an understanding of how you're seeing things.
So I mean, I started with InsurTech. I was one of the sort of founding council members of InsurTech UK. I think we started it. I think it's 2017. I think was and I think InsurTech Australia got going a similar time. And obviously there's lots of good conferences. It's a big conference in Las Vegas every year. And what I've seen is that there was a certain challenger rhetoric, shall we say, in the early days. It's like the incumbents need to all die, a pox on everyone's houses. In fact, I was never one of those, to be honest. I am a little bit towards broking consolidators. I'm a little bit chippy that way, as you probably already realised. But when it comes to the incumbent insurers, I think they need to reform, yes. But I mean, there were a lot of people who wanted to focus in on, let's say, an individual customer segment, an MGA-led proposition, and going in with it was a lot of B2C offerings around different customer experience by unlocking technology, and we'll do that sort of MGA. And I think what I've seen, and the ones that were, as that's shaken out, I've seen, and I think the membership of InsurTech UK is pretty evenly split between sort of two types. There's let's say regulated entities, probably a bit less than half now, I think. I mean, I am a regulated entity, but I'm a broker, a pure broker. But the majority wouldn't be like my business model. They'd be more kind of writing their own products, MGA type structures, and they would have a product, and they'd have some sort of differentiation around risk insights or a product feature or customer experience or something for whichever segment they're in. And then the other half are actually technology providers to the industry. And I think probably what's emerged, and this is I think it's actually thanks to just the coincidence that we've got the London insurance market, obviously in the UK, obviously by definition, but which is it's one of the primary global markets. So I think there's some really interesting innovation coming out. There's a really good program that Lloyd's run with the Lloyd's Lab that's given quite a lot of input. And I think as a result of that, you tend to get some really, really interesting kind of global plays around particularly risks like, insights into, I don't know, farming risk, crop failure, or tracking international cargo and this kind of stuff, which is, where actually a tech solution, the adoption process for the tech solution or the product is actually relatively small number of individuals you have to convince to take it up, but the impact could be quite massive because it's effectively a wholesale market, isn't it? It's a capital market, largely speaking. So that means that they're embedding, if you're track containers or something all the way around the world, before you know it, it's become the global standard, and InsurTech can scale to that level by embedding things via the London insurance market. So I think that's a really interesting trend. I think what we have seen
So have you seen that, John, in terms of like success there, in terms of obviously Lloyd's Lab is I'm going to guess here 6, 7, 8 years old, something like that.
Something like that, and they tend to have cohorts of about 8 to 10. I think. 8
to 10 each year.
I mean, it's not the only innovation. There were a couple of incubator programs in the UK, and then there are people I didn't go to an incubator. I mean, you've just got the insurance ecosystem, generally, I suppose. Yeah,
there seems to be. It sounds similar, I think, in all the conversations I have globally, which is that the challenger to working with. Partnering with versus kind of trying to beat. I think we saw it, and I think the finance industry was a really good canary in the coal mine for this. I think kind of if you looked at the finance industry, they are a little ahead of us from an industry standpoint, and exactly the same really cycle happened, which is everyone came out trying to beat the banks, and then everyone started partnering. And so there's a few obviously standouts.
Although, we
Revoluts
did have, I mean, in the UK on banking, we had these neobanks.
Revoluts and Starlings and those kind of guys, haven't you? So they've done a good job.
I mean, they did get a massive influx of cash from the post-2008 financial crisis, obviously, as well, which helped.
Yeah. But I guess there's a couple of MGAs you call out in the insurance industry, like a Root and a Lemonade. There's like a few of those folks that have got loads of capital and stood up and been full stack, but the majority has now gone long tail and partnered, and it sounds a little similar.
Yeah, no, I think that's broadly the case. Yeah, and I think there's a little bit of air coming out the tires on some of those things. I think the consumer adoption to completely fresh propositions has been maybe not as quick. I think there was a little bit of hubris, and I'm not one of them, and I suppose I'm being probably going to sound slightly critical. I suppose I'm being critical. There was some people who didn't come from the industry, shall we say, who thought it was a rotten thing, and all you need to do was kick the door in. And I think, and again, as a deep insurance person with a passion for it, I think they maybe misunderstood the, let's say, less than shiny presentation that the industry gives out to the rest of the world, with a lack of insight and intelligence inside the industry. So, I back insurance people, like really do back the professionals. I back actuaries, I back underwriters, I back brokers, I back loss adjusters. I think those people are really insightful, and I think insurtechs that walk past those people as early members of their teams, I think have regretted it. That's not to say that you can't be a successful founder not from a background, especially if you're providing tech, because obviously there's a read across from other sectors. But I think you've got to respect, and it's not respecting the traditions at all, it's respecting the expertise and the insight, because the problems it may be that you, because you come from, as an insurtech founder, you personally, but people who are starting up as insurtechs might have the solution that solves the problem, but you need to know where the problem is. And the problem in insurance is that there are quite a lot of them that are nested within quite complex structures. It's quite difficult to get to the bottom of what the actual problem is. And a lot of people, I think, came in with a kind of rather naive consumer insight. My travel insurance claim didn't get settled very nicely. Okay, yeah, that is true, and and you can definitely improve on the UI of that process. But can you build a business on that? And what are the reasons why that is as it is? And
there's a lot to it. There's a lot. I think that was the
incumbents do, and the incumbents can actually fix that, because these are very fixable problems. It's just a little bit of incompetence in bad process discipline why they haven't got around to it.
Yeah, the complexity of the value chain, I think, is something kind of poorly understood, and that's just in terms of the interactions all the way, all the players within the value chain through Lloyd's, through reinsurance, like all of those layers, all have nuance to them and depth to them, and it's hard to get that without being in it. And so,
or being in it, and it's always that synthesis. It's that synthesis. It's like, oh, I understand all that complexity, but because I understand it, I can see that could be cut through in this way or that way, and that's the hard thing. I mean, obviously, you could take a more contrarian view and say, well, actually, if you were a real Silicon Valley maverick, you might say, well, that's all ridiculous. Let's just cut the whole thing out and start again. And I guess arguably that's where a lot of these folks started, because they applied their sort of Silicon Valley blitz scaling sort of mentality to it, and that can work. I suppose the question is that working because they were basically they managed to tell a capital raising story, or is it working because they managed to get a cut through product market fit? I don't know. And if you spend 10 times more doing UI changes in the industry, have you created the new iPhone, or have you created something, or have you created pets.com? You just who knows?
Well, yeah, no, the I guess over time we will know. I think in terms of can those businesses get profitable? Can they get their ratios where they need to be? Like those are all the questions, right? That
Yeah.
will tell the story, and then you can't, as you very well know, insurance is a data game and a loss adjusted game, and so once the water runs out, then what the portfolio looks like is what the portfolio looks like. And
well, you think of where the money goes, right? The money goes. I don't know life insurance so well, but I know general insurance. 60-70% of the costs are going in claims, maybe 80, depends on the market. You've got 10 to 12% insurer personal expenses, and then there's customer acquisition cost / commission, whatever your business model is to go to market. Okay, what are you going to affect, right? I mean, you can have an amazing cut through proposition, and you can reduce that customer acquisition cost down by 50%. Well, that's only 15-20% of the cost base. But if you can do something on claims, okay, interesting.
I'm just trying to think about it, John.
But that comes to resilience and risk management and all those other things. But I mean, this is really where the interesting stuff is.
Yeah, totally true. I could speak to you all day, John, but I'm aware that you've got a job to run and a company to build, and so I'm going to ask one final question, if that's okay. Mm-hmm. Obviously, the focus of the pod is building tomorrow's insurance. So I'd like to get you to gaze into a crystal ball, if that's okay. And we are having this podcast in, say, 5 years' time. Mm-hmm. Like, what do you think our world looks like? Do you think it's very similar? Do you think actually we are overemphasizing some change that will happen in the next 5 years? Do you think there's going to be maybe 2 or 3 big call outs that you think will look different and we'll go, actually, we weren't expecting this, or these are things that have been really impactful?
So, well, let's just stick to my world,
absolutely.
The world of commercial insurance, and I suppose I have a little dream that the people who work in insurance, it looks a bit more like people on a trading floor in the financial markets in a positive way, and in that I mean there's a lot of interaction, there's an energy to it. I mean, talking now, but sorry, underwriters, I mean, the conversations that happen there's lots of conversations happening between underwriters and brokers, and yes, buttons are being pushed, things are being done fairly automatically to fulfill transactions and to do pricing, but the conversation, there's actually a higher percentage of time by everybody spent talking to each other, and you effectively get higher revenue per employee that way, rather than removing interaction, so that the interaction between brokers and insurers and between brokers and clients moves to more talking like this and unlocking genuine insight and learning and all of that stuff, and less button pushing and admin. And I think that's the trend. That's if you like the Robocop thing delivered. Loads of barriers to that from both brokers and insurers. Obviously I'm hoping my firm will be even more successful and we will be at the forefront of that. I think the constraint at the insurer side, because you said insurer of the future as opposed to insurance player, I think that's the game for them, really. I think they need to reverse the depopulation of their organizations, and take pride in having, like if you're going to use a military analogy, what they need is loads of SAS troopers, and they don't need the catering corps, right? And the pay corps. So they need to have this sense that the power underwriter who's got the tools at their disposal is out there trading, making decisions, building relationships. That, and I think getting back to that, whereas I think we're in this kind of doom loop for the insurers, certainly in the UK, where they're nudging up what they call the E-trade threshold and basically taking people out of the loop completely in the transaction. And I think that is an industrial age automation mentality rather than an AI augmentation of human potential mentality. And I think that is what I hope will change on the insurer side. And if I don't know exactly what your functionality is in Canopy, but if you're part of that revolution, then more power to your elbow, because I think that is that is where that needs to go. And I mean, I was at Accenture 20 odd years ago, and we were talking about decision support tools for underwriters back then, and that stuff can be delivered at a scale now in a really interesting way. And I think that's the point. I think bringing the people back into this industry, talking to each other, being highly efficient, talking baby big numbers, but the world is out there. The traders in the financial markets, top lawyers, top accountants, these top lawyers are spending a fair amount of time face to face with clients, chatting and having lunch. But great insights are being developed by doing things that way. So I suppose, more human, using technology as a tool, not as a substitute for labour. That's probably where I hope it will go.
Yeah, I think I agree with you. You get an adjunct to humans, I think, is important. And John, this has been so insightful. I really appreciate your time. So thank you so much. A man of much wisdom. So yeah, really appreciate it.
Thank you. Lovely to meet you.
John, well, look, thank you, everybody. I hope you enjoyed this episode listening to John. John, I'll hit you up. I'm over to the UK in a couple of weeks, and so I'll drop you a note. We can catch up. I hope everyone you really enjoyed this video episode. If you do want to look at it, jump onto YouTube. You'll be able to see it there. And as always, if you want to hear more from industry leaders who are pushing the boundaries of insurance, please do check out our other episodes of the podcast, Building Tomorrow's Insurer, on our channels. John, thank you, and have a wonderful rest of your day.